a quick video talking about inflationary uptrends and budget deficits. Uh, so the first things I wanted to point out is commodities have been really taking off. I have here, um, these are agricultural commodities, and you can see that in the last month, 3 months, 6 months, 1 year. Look at this 6 months. You can see soybeans, corn, they're 50%, 60%. Um, Platinum, palladium, silver. Gold is lagging, but I'll get to that in a bit. But you can see that even oil and gas are on uptrends. Um, I figured I'd bring this to your attention because I don't think it's on a lot of people's radars. There's dynamics going on in each of these markets, such as oil, gold, soybeans, corn, that are affecting them individually, but you can see that the the trend in general is upward, and that is as a result of a weak dollar, a weakening dollar. So I thought I'd bring this trend to your attention because it's likely to continue. I know that a lot of people are expecting prices potentially to go down because of global demand shortages, but the supply shortages will be greater than the demand shortages on a lot of things in the world coming up here. Um, Second thing is there's record growth in money supply. So here we can see a graph of, this is the Federal Reserve St. Louis Fed website, and you can see, I think this yellow represents um, the pandemic, and this gray is for the last recession. And as you can see, our money supply growth is off like it's just going off the charts. Historically speaking, like what we spent to get ourselves out of the last Great Recession in '08, $1 trillion. We're going from 7.4 to 8.4, and now, oops, I mean, we spend that like it's nothing. I mean, trillions. See, back here, billions was a big idea. Like, they threw the word billions around, the word billions. Now they throw the word trillions around because it's just become, the money supply is growing at such an unsustainable rate that, I mean, our whole system's a Ponzi scheme, and it has to keep growing to sustain itself. And we're seeing the last dying breaths of the system right here, which was accelerated by the lockdowns and the government policies. Um, so I'll, there's two primary reasons that they're increasing the money supply this much. The first is to cover the budget deficits. I mean, they can't raise people's taxes to pay for the government spending that we have. I mean, people are just bled dry. They're taxed really high as it is. And the only people not taxed high are the rich. And if you soaked all of the richest money right now, it would last us like a few months. The government spends so much money that taxing the rich isn't even a viable solution because the money would still be gone so fast that there's almost no point in stealing the rich people's money. They would use the money better than the government, and it, it's it's a mess. So the second reason that there's so much money supply growth is to prevent interest rates from rising. So here you see a graph of the 30-year Treasury, and the 30-year Treasury is, in layman's terms, what you buy if you want to loan money to the government for 30 years. Typically, historically, and academically, it's considered a safe investment. It's considered to be risk-free return, but the reality is that it's return-free risk. And the reason being is the inflation rate, even the official inflation rate is over 2%. And so If they're paying you 1.88% a year, you're by definition already losing money a year doing this investment, loaning money to the government, even with their false, underreported inflation statistics. So a big reason they have to print so much money is they have to be the buyer of last resort of these treasuries, which is basically the loaner, the banker of last resort to the government. Individuals who've worked for their money and are looking for the maximum return on their capital would never loan money to this government unless they're stupid, because you're guaranteed to lose money. The Federal Reserve, though, on the other hand, creates money out of thin air. They're not using money that they worked hard for. So what happens is they have to. This system in the government is obviously insolvent. There's way more liabilities than money in existence and assets in existence. They're just trying to maintain the cash flow. Cash flow is everything, and as long as you can keep paying your bills, you can maintain a facade. And the way they maintain the way they're able to pay their bills is by artificially increasing demand for these bonds by buying them. They artificially suppress the interest rate. And by artificially suppressing the interest rate, they now no longer have to pay the financiers of the government an absorbent amount. So in a normal free market, without the central banks buying these bonds, I mean, you could have the free market demanding, because of the financial irresponsibility and recklessness of the Western countries of today. I mean, people would demand. I mean, historically, I mean, back in the 80s even, I mean, people could demand a 10% interest rate for loaning to this risky government, because the inflation risk with how much money printing they're doing, the inflation risk has never been greater. And so to compensate for the inflation risk, normally you would ask for a higher yield. They're suppressing that yield. So by printing money that didn't exist and buying treasuries, artificially suppressing the interest rate, our government would never be able to finance itself without this mechanism going on. We can't raise taxes, so we have to print all the money. It will be politically unpalatable for taxes to be raised, except on the rich. Biden will probably raise taxes on the rich a little bit, but it'll just be for show. They'll hire their CPAs and get around it. And, the rich never actually get hurt because they own the government. So that'll just be a facade. So, and what's interesting here is you can even see proof that the Fed is buying these bonds. You can see that change from week ended of last year. So we can go from, so this column is right now, and this is the change from a year ago. So make it so I can, this is more legible. So this is this week, and it's from a year ago, that column. So you can see notes and bonds. So they doubled. You can see that from a year ago they went from basically 200. So this is in millions. So you have millions in millions. So that's trillions. So you have an increase from 2 trillion to 4 trillion in the Federal Reserve's holdings of treasuries. So they have doubled their holdings of treasuries. That's where a lot of this freshly printed money goes. It's only used to suppress interest rates because the whole system's insolvent as hell. So it's how we pay our bills. And so I wanted to show the oil uptrend. Now this is a 3-year graph of oil, and you can see right here, this is when oil went negative right after the pandemic. I mean, people thought the world was going to end. Well, people thought that the world would be flooded with oil, and there would be no demand. Now, that dynamic is somewhat true. I mean, people are going to be too broke to go anywhere. Economic activity will decline, but they're printing too much money. They're printing so much money that it will override that dynamic. There will be so much inflation, especially for the US dollar, that even with the low global demand, the inflationary dynamic will kick this into overdrive, as you can already see playing out. So it only took a few months for oil to go from 40 to 55. We could see $100 barrel of oil by the end of the year, and the last time we saw a $100 barrel of oil, it was because of an oil boom. This time, if we see a $100 barrel of an oil, it'll be because of inflation. So you could see agricultural stocks go up in the near term, oil stocks go up in the near term. Um, this time, when oil goes to 100, we'll be importing a lot more of the oil. So um, a lot of our shale industry was obliterated. A lot of people also in the last oil boom 8 years ago, 10 years ago, they got wiped out financing that oil boom. People expected it to stay at triple-digit dollar barrel a lot longer. And once 2013, 2014 came around and the dollar got strong, I mean, the people who invested in these commodity producers got obliterated. So people are very adverse to these commodity producers, and people with money. I mean, some of these people just got annihilated investing in oil last time. So um, that's going to contribute to the supply shortage. So trade deficit will keep going up because we don't make anything on our own. And to finance the trade deficit, we'll have to print more money because we can't raise taxes. That will make the dollar go down, which will make commodities go up and bonds will go down. When bonds go down because the dollar went down, interest rates will rise. And when interest rates rise, they'll have to print more money to suppress those interest rates. And then that is the inflationary death spiral, which and will end us the way it ended the Roman Empire. So um, due to the government debasing our currency endlessly. So that's about it. Till next time.